Hello and welcome. Thanks for joining this discussion, which has been arranged for you by the experts over at My Tax Accountant. So, have you ever given a large cash gift and then had that little moment of panic? Wondering, does HMRC know about this? You're definitely not alone. Today, we're going to pull back the curtain and find out exactly how they know.
Yeah, that really hits home, doesn't it? It's that classic mix of feeling incredibly generous and, well, a little bit anxious. You just want to help out your family, but the last thing you want is an unexpected and frankly quite scary letter from the taxman down the line.
So, this is the big question, right? How do they find out? It's not like they're literally watching your bank account in real time, but they are not guessing either. They have some really clever and surprisingly high-tech ways of putting all the pieces together. Let's take a look. Okay, so let's start with Section 1, HMRC's Watchful Eye. Now, first things first, they really don't care about the 20 quid you popped into a birthday card. They are looking for the big stuff, the significant transfers that could actually make a difference to your estate's value later on.
So HMRC has a sort of data trail, and it mainly comes from three places. The first one is pretty traditional. When someone passes away, the executor of their will is legally required to report any big gifts made in the last 7 years. Then you've got banks and other financial institutions who have to flag large or unusual transactions. But really, the true game changer, the thing that ties it all together, is their technology.
And here it is. It's a powerful piece of software called Connect. Honestly, you can think of it like a super smart AI detective. It chews through billions of pieces of data, bank records, land registry info, even data from overseas, and it's searching for just one thing, things that don't add up. A huge gift leaving your account that doesn't quite match your declared income? That's exactly the kind of thing that raises a red flag for the system. And if you think this is just theoretical, think again. The consequences of getting this wrong are very real. Just look at this case from 2023. An undeclared gift of £440,000 led to an £87,000 penalty. That is a huge amount of money, and it's a very clear warning that getting this wrong can be incredibly costly. So, why all this fuss about gifts in the first place? Well, for the most part, it's not actually about you paying tax right now. The real reason HMRC is so interested is because of inheritance tax. And this is where something called the 7-year clock starts ticking. This all comes down to a really important term, the potentially exempt transfer, or PET for short. Pretty much any large gift you give to a person is considered a PET. And the key word in all of this is potentially. It means the gift is only potentially tax-free. Because here's the catch. If you die within 7 years of making that gift, it's not exempt anymore. HMRC basically adds its value back into your estate for tax calculation purposes. And if your total estate is now over that $325,000 threshold, anything above that line could get hit with a massive 40% tax bill.
But, okay, there is a bit of good news here. It's called taper relief. The tax rate doesn't just stay at that huge 40% for the whole 7 years. If you make it past the 3-year mark, the rate starts to drop. As you can see, the longer you live after making the gift, the lower the tax rate gets, until after 7 years, poof, it disappears completely.
All right, we've covered the scary parts, but the good news is there are plenty of ways to gift your money generously and smartly, completely above board. It's time to open up your tax-free gifting toolkit. So how do you give gifts without even starting that 7-year clock? Well, you've got several official allowances. Every single person has a £3,000 annual exemption. But I want to point out one of the most powerful and honestly most underused exemptions, normal expenditure. If you make regular gifts out of your extra income, and this is key, it doesn't change your own standard of living, those gifts can be for any amount. They're immediately exempt from inheritance tax. That is a massive one to know about. Now, knowing about these exemptions is great, but you have to be able to prove you use them correctly, and that's where good record keeping comes in. It's not exciting, I know, but it is the single best way to protect your family from a whole lot of stress later. Think of this as your simple compliance checklist. Every time you make a significant gift, just create a clear paper trail. And you might wonder, why a gift letter? It's so that HMRC can see in black and white that this was a genuine gift with no strings attached, not some kind of informal loan. Taking just 5 minutes to do this stuff now can save your loved ones months of headaches in the future. And a quick but really important note for any business owners out there. You have to be extra careful. It is absolutely critical that you make gifts from your personal account after tax has been paid. If you give money directly from your business account, HMRC could decide it wasn't a gift at all, but a taxable dividend, and that can create a whole new world of tax problems. Okay, so we've looked at how HMRC finds out about gifts, we've demystified that 7-year rule, and we've checked out your tax-free toolkit. But what happens when your own financial situation is, well, a bit more complicated? The main takeaway here is pretty straightforward. If you're running a business, if your finances are a bit tangled, or if you just want that complete peace of mind knowing you've done everything right, getting some expert advice really is the smartest and safest move you can make. So if anything we've talked about today has made you think about your own plans, the best thing you can do is talk to a professional. The team at My Tax Accountant who put together the information for this discussion specialize in exactly this kind of thing. Because at the end of the day, planning your gifts properly isn't about dodging tax. It's about making sure your generosity and your legacy reach the people you love just the way you wanted.